Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is a financial education channel, and today we're talking about how you can make loads of money investing during a recession. So investing during a recession, it can be such a scary time because everybody's profits are pretty much going down. Almost everybody's revenue is going down. There's talk all over the regular news channels, all over the business news channels about how bad things are. And it can just be so scary. And so many people don't invest during a recession. They put their money aside and they say, oh, I'm not investing during a recession. No way, that's too scary. Look at the stock market's down 3,000 points in the last 3 months or whatever. No way I'm touching that. And it's such a frustrating mentality to have because that's the best time you could ever have to invest. It's like the blessing of blessings as far as an investment standpoint goes. Investing during a recession, there's so much money to be made. It is sick. It is sick how much money there's to be made during a recession, guys. So I'm going to give you a few steps today, 5 different ways you can make so much money during a recession, guys, and kind of what's important when investing during a recession, those kinds of things, guys, because so much money can be made. You know, a lot of people don't start getting in the market until it's already like at all-time highs and whatnot. That's kind of like the worst time to get in, generally speaking, you know, when the stock market's at all-time highs. When it's a recession, guys, that is like the best time ever to invest. And I'm gonna show you some charts today that are just gonna blow your mind. Like, wow, the stock market went down that fast, it went up that fast, It's amazing, guys. So number one, you want to invest in companies that have good balance sheets, that are rich on cash, rich on investments, and have very low debt. Now, isn't that the thing I preach the most out of pretty much everything? Balance sheet and investing? Yes, and this is why I preach balance sheets so much to you guys. You know, almost every beginner stock market video I do or videos where I talk about any stocks, I break them down, we look at the balance sheet every single time because I think as a long-term investor that is so important because when you go into recession, and that will happen eventually, that always does happen, recessions come and go, those companies that have really poor balance sheets will get nailed worse than any stocks out there, guys, because everybody's scared. And if they see a ton of debt on a balance sheet, not much cash, you are also unprofitable or you're making very slight profits, all of a sudden the thinking behind that company becomes, oh my gosh, I should not invest in that one. I need to sell my shares if I do own shares. And those stocks just get hammered worse than any of the stocks. When you have a poor balance sheet during a recession, your stock just gets nailed, guys. Once again, this is why I preach balance sheet all the time to you guys. Balance sheet, balance sheet, balance sheet is so important to invest in companies that have good balance sheets for when that dark day does come, a recession happens, or when just basically that company comes upon troubles, which sometimes does happen. You got to have companies that have strong balance sheets so that they can make it through those tough times. They can make it through a great recession like a lot of the companies did. And the companies that didn't have great balance sheets, guys, and were super leveraged, those stocks either got hammered so super low or they went bankrupt. They simply went out of business. The amount of the companies that went bankrupt were phenomenal during the Great Recession. Especially a lot of big financials went bankrupt, guys. And you lost 100% of your money if you were in some of those names. On companies that were seen as being such safe investments, some of these big financial institutions that had market caps of hundreds of billions, guys, some of them went down and became literally worth nothing or got sold out for $3 a share or whatever to some big bank. So always invest in companies that have great balance sheets, especially during a recession, because that gives you a lot of protection, guys. Number 2. Buy, because things change fast. And you can say, well, Jeremy, you know, the market's going down so fast. You know, well, don't you want to invest at the bottom? Yeah, but how do you know when the bottom is? How do you know when that bottom is? I don't know when the bottom is. I don't know anybody that will know when the bottom is. Same thing, I don't know anybody that knows exactly where the top's at in the market. You know, oh, the market's going to max out at this price. No one knows that kind of information, guys, because there's millions of participants in these stock markets, so there's so many different factors to take into account that no one knows when the bottom. So when you see great deals, you're going to buy, regardless if that stock does go down more or the market does go down more. You just got to start buying and buying because things change so fast, guys. Let's look at some screenshots we have here, guys. So this was during the Great Recession. So you can see this is a Dow Jones Industrial Average. In March 31st, 2008, the stock market was at 12,800. So let's just assume around 13,000, guys. Around 13,000 the stock market was at March of 2008. Then we go ahead and less than a year later, about 10 months later, February 1st, 2009, the market was at 7,000. The market had lost 50% in 10 months, guys. 10 months, and the stock market dropped that much. That's a huge drop, guys. Huge drop, and you can say, Jeremy, but why would I want to have been investing when the stock market was at 9,000 or 8,000? Well, how did we know it was going to go down to 7,000? Who knew it was going to go down to 7,000? And then watch how fast things turn for the uptick. You would have missed out on a lot of gains if you were waiting and then say, oh, well, I'll wait till it hits 6,000 or 5,000. That's when I'll start investing. You would have missed out on all the gains because watch how fast things go up. So February 2009, it was at 7,000. Next thing you know, March 1st, 2010, so a year and a month later, the stock market was nearly 11,000. So if you had been waiting for that 6,000, that 6,000 number, that never came, and you missed out on huge gains because so many stocks were down dramatically, guys. Absolutely dramatically, just got killed. We're talking stocks that were down 70, 80% in a year. And then rocketed up 100, 200% over the next year, guys. So you want to be buying when you get that recession because things change so fast. They really change so fast. 1 minute is dark, next minute it's, I can see the sun and the lights coming out. So you want to be buying, taking advantage of things, guys. So next one up here, we have number 3, buy short-term puts to protect yourself. You want to always be buying short-term puts in a bad recession where the stock market's going down. Reason being is you're going to protect yourself and you're going to have a way to make money if that market does keep going down in the short term. So you buy puts out that are, 2 weeks out, 1 month out, 2 months out, put options like that. That way that in stock you're also buying and going long. If that market continues to go down and down and down, you're going to make a lot of damn money on those put options because when you go to sell them, you're going to be able to get so much more money than what you bought them for, essentially. Then you can go ahead and take that money you made, the huge profits on those short-term put options, and then buy that stock you were buying at even a much lower price, guys. So short-term put options, you can make so much money on during a recession. And when the stock market's in free fall, guys, there's so much money to be made buying short-term put options. And like I said, then you go ahead and take those profits and go into the stock that you believe in the long term, and you get to buy it at so much cheaper prices than you were buying at in the first place, guys. So short-term put options, phenomenal during recession. Number 4, buy short-term puts on companies that have weak balance sheets and are capital intensive. Capital intensive means it takes them a lot of money to run their business, to build out their business. Big hotel, resort companies fall into this category. Credit card companies fall into this category because their balance sheets, generally speaking, are not as well. And we'll look at some stocks here, guys, that just got killed in businesses that are capital intensive and didn't have the strongest balance sheets in the world. Some stocks that just got destroyed, guys. So look at this. So first off here, we have Cabela's. Cabela's is a retailer, but they also had a huge credit card business. They still do have a huge credit card business. And basically, you can see August 31st, 2007, that stock was a $23 stock. Next thing you know, December 2008, so less than a year and a half later, it was a $5 stock, guys. How did it go from $23 to $5 in less than a year and a half? Well, how it did it is because they had a huge credit card business. A lot of people were unconfident in their credit card business. And they thought that stock's just going to, keep going down and they might not be able to make it. Their stores are so expensive to build. Their stores were like $30-40 million to build at that time because they were building them so big. So people looked at the stock as this is just a worst stock ever because they're going to get a ton of declines. A lot of people that are having hard times, they're just not going to pay their credit cards. They're going to take defaults on that. It's going to kill Cabela's credit card business. It's going to put them in financial jeopardy. Now, what people didn't actually understand because they didn't do enough work on Cabela's, and I was actually doing the work on Cabela's and understanding this is actually a pretty damn good stock, is that the average Cabela's credit card holder, had a credit score of over 700. So you're talking about some of the best people you could possibly have in the credit card business. So the companies that were taking these huge losses that had, people that had credit cards with 500 credit score and 600 credit score, Cabela's had an average of 745 or something like that. So their customers had a lot better chance of paying those credit cards actually off than some of the other companies that were taking huge rate downs on their credit card business, just huge losses, guys. So that's what I saw in Cabela's, and Cabela's ended up bouncing back huge. You know, now it's a $60-something dollar stock, but very rapidly, within a year or two, it was a $20+ stock again. So once again, that goes back to number 2, buy when you have the opportunity. Let's look at Ford here, guys. Ford in March 31st, 2008, that was an $8 stock. $8 stock, guys. January 1st, 2009, so we're talking about 8-9 months later, it was a $1 stock, $1.87. How did Ford go down so much? Well, they're a company that relies very heavily on people buying expensive things, which are cars, which people were not doing during the Great Recession. And then on top of that, they had a very poor balance sheet. Their balance sheet was garbage, guys. So a stock like that got absolutely destroyed. Absolutely destroyed. So that is a type of company you want to avoid. And if those are the type of companies, if anything, you want to short. So that goes into that, guys. And number 5, you want to pay attention to which countries are coming back and which companies are earning a lot from those specific countries. So generally, when recessions happen nowadays, guys, generally the entire world goes into recession because we're so intertwined with so many other countries. You know, the United States with China, China with Europe, United States with Europe. We're so intertwined with each other that generally when a major country gets a recession, pretty much everybody gets a recession. It's like a contagion, guys. So what you want to look out for is look out for the numbers that are coming back the strongest and which countries those are in, and then find stocks that are highly dependent upon those type of countries. You know, they get 30, 40, 50% of the revenue from those countries, and then go ahead and start buying those ones first because those ones will show much better earnings in the short term, and people will look at those as a guiding light, and then those stocks will generally go up substantially. So say there's a company, a coffee company or whatever, they get 35% of the revenue from China, they get 20% from the EU, and then they get the rest from the United States. Well, if China came back super strong and is coming back super strong, then that might be a great company to go into because they get 35% of their revenue from China. So you go ahead and buy that one, and then their numbers are going to look much better than everybody else's numbers in that industry or related industries, and people are going to go, wow, they're doing good even with this bad recession. You look at how much their numbers have come back versus the previous quarter. So that is a huge thing you want to look out for. Look out for the numbers that are in these other countries that are coming back stronger. Find companies that are highly dependent upon those countries for huge gains, and then go ahead and go long on their stock, guys. So that is investing during recession. Those are the ways you can make so much money during a recession, guys. It's one of the best times you could ever have in your life as far as making money in the stock market. It really is. You just have to know how to play put options. You have to know how to play call options. You have to know when to go long a stock. You have to take advantage of it. A recession is a terrible thing to waste, guys. It's a terrible thing to waste. So when a recession does come, and it will come, don't waste it. Make a lot of money, guys, because you absolutely can. I hope you guys enjoyed this video today. If you come across and you have not subscribed yet, you may want to. I talk about personal finance on the channel. We talk entrepreneurship on the channel. I'm an entrepreneur. And we also talk the stock market the most on this channel, just like we did today. Thank you for watching, guys, and have a great day.